Hi guys, this is Mark Shaws in the Pattern Trader. We're a couple days removed from the US election, and while there is still not a final outcome that's been determined as to who the presidential winner will be in the United States, to my mind, the market is well ahead of that outcome. The market is a discounting force. The market is starting to pick sides, and certainly the one asset class, the one currency that, to my mind, has picked a clear direction, in fact, for several weeks and months now, is the US dollar. Now, during the height of the pandemic in March, when the US dollar rose to a new high, or the US dollar index rose to a new 10-year high, I was saying at that time to our members that that was likely going to be a major peak because I'm going to go into the real-time charts in a moment. I'm going to show you a 43-year chart. And even though we've had a 10-year run in the dollar index, to my mind, it was just a question of time where we were going to start seeing a reversal along this resistance line. And it coincided right at the depth of the pandemic. And then since that time, the US dollar index has formed a head and shoulders bear pattern, a head and shoulders reversal price pattern, which means that the price trend, the huge uptrend of the last 10 years, is likely going to be put into full throttle in terms of a reversal. And that's what we're starting to see. The US dollar is starting to decline, certainly against certain currency pairs. I'm going to point one particular currency pair that I like versus the US dollar that, to my mind, is just a certain winner long term. But again, the US dollar picked a direction starting March and April. It's been going lower in fits and starts, but I think it's likely to pick up steam as we keep going forward. And as I'm going to show you on the real-time charts, once the US dollar picks a direction, it goes in that direction for 5, 8, 10 years. So if you think you've missed the beginning of this dollar trend, I think we still have months and years to go. So with that said, I'm going to go to the real-time charts and show you what I'm talking about. Okay, so in a moment, I'm going to open up a couple of price charts and show you my reasoning on why I think the US dollar is going to crash for many months and possibly years to come. Now, I guess it's important at this point to digress and reaffirm exactly, what and how I look at markets. So in the particular case, I'm looking at the US dollar index on a weekly chart. And you can see all the way at this peak here, this was the height of the pandemic back in March and April when the coronavirus started circulating around the world started going into a global shutdown. Investors panicked, they sold out of their hard assets and moved into the safety of the US dollar, and you saw the dollar careening higher. But as it was going higher, I was counseling our members to be very aware that this was going to be an opportunity for a turn in the US dollar, and that's exactly what we've seen, where we see that the dollar index peaked out way above here when it was trading an equivalent of about 118 euro, and then crashed to now where we're close to 120 euro. And again, I think it's important to note that I wasn't looking at worldwide panics. I wasn't looking at telecasts on the BBC or CNBC for what was happening in the news. I wasn't looking for Federal Reserve monetary reports. I was simply looking at price action. And when I kind of whittle back to another time frame where I show you this on a longer term chart, you'll start to understand how, to me, price indicates where the market's going to go. The markets are a discounting force. The markets are ahead of the news. So even though we were in one extreme here where we had a 100-year pandemic, and in this time frame we had a huge U.S. election, notwithstanding those divergent outlier events, price was ahead of the information and was already starting to tell us in which direction things were likely to go, independent of the news that was circulating on that particular day or time. Now, just to put things in perspective, I popped on the chart a 43-year chart of the US dollar index. And I just want to remind those, the US dollar index tracks the US dollar against a half a dozen of the most liquid currency pairs. And we see this chart going back all the way into the 1970s. So a 43-year history, which starts to put things into perspective. And one of the things we start to see is that over the last 10 years, we've had a 10-year bull run in the US dollar, which has seen the euro versus the US dollar in this time span crash from 160 to about 102. But again, I think the party is over for the bull market in the US dollar, because notwithstanding the fact that we had this large rally, you can see that over the course of time, the dollar index has had these rallies, but every time the rally is higher than the last. So we've been kind of vacillating within the confines of this descending triangle, where you see that we have these rallies and each rally is lower than the last. And then in this recent time frame, we have this double top right around here, corresponding to this resistance line. So you can see this double top peak looks just like an M top, and should we come down here and crash through this, you would come through what's called the neckline, and this would fulfill this reversal price pattern. I think that's already happening. We'll see it on the weekly charts, the daily charts. I think that this is well underway. Frankly, this 43-year chart lags somewhat, but we will catch it up in real time in just a moment. But what I wanted to point out is that we have had this recent 10-year run, but it's been within the confines of this actually declining price trend with this sawtooth price pattern. And it looks like historically we're going to see something like this over time, which means that the dollar looks like it's got a lot of room to fall on the downside. Now, one thing I'd point to you before we leave this chart is we have had a huge crash already in the dollar since March. But to my mind, this thing is just starting. Like I said, this is a little bit of a lag. It's a little bit behind where we are currently. But if you look at dollar trends, you'll see that when the dollar runs, it ran for 10 years in this direction. Then it ran for another 10 or 15 years in this direction. And then it ran for another 10 years here. And then another 10 years here. And then lately, from 2010 to 2020, we had another rally in the dollar. So this is obviously a smoothed out curve of the US dollar. But you can see that once the dollar picks a direction, it goes in that direction for 5, 8, 10 years. So I think we are just at the cusp. We are just at the beginning of a momentous dollar crash. Now I've toggled back to the weekly US dollar index that we initially began looking at. A weekly chart means that each one of these price bars is a 1 week time frame, and you can see the double top that took place along that 43-year downtrend line more closely on the weekly chart here. Now, in addition to the double top here, we have formed in the more immediate time frame this head and shoulders price pattern, which looks just like a man or woman's head and shoulders. So this would be the left shoulder, the peak would be the head, that would be the right shoulder, and now we have a perfectly formed head and shoulders reversal price pattern. Reversal meaning that into the price pattern, prices were heading higher. And as this is a reversal price pattern, it means that price trajectory is going to reverse and go lower. Now, recently, the head and shoulders price pattern was confirmed by going through the neckline. The neckline is simply a line that is drawn through the pattern. We initially went through the line, and now we retested the line, and now you can see that we formed a resistance at the neckline and now are heading smartly lower. So this is just following the election. We haven't had an official outcome yet, but the market is a discounting force. The market is seeing ahead of where it's going. Frankly, the election outcome was not going to determine the trajectory. The trajectory was already going to be determined by the previous price pattern. So the market is always ahead of the information, despite what seems like all kinds of outlier events like elections. We still have huge uncertainty hanging in the balance. There has not been a determined winner. But to my mind, the dollar index by virtue of its price action all the way in March, and the ensuing price action currently is pointing definitively in a direction lower. Now, it's likely that all of the major currencies will start heading higher versus the US dollar, but on a risk-reward basis, the one currency that I think will be a great beneficiary of a dollar downtrend is the Australian dollar versus the US dollar. Again, we're looking at this on a weekly time frame, which means each one of these price bars represents 1 week in time. And you can see that the Australian dollar versus the US dollar has been in a protracted downtrend for 10 years, consistent with what we saw on the dollar index, but also consistent with what we're seeing on the dollar index is that I think we're getting a turnaround in the Australian dollar. You can see that we're starting to peak above this downtrend line now. We've had some price action right at or near this major downtrend line, and that recent activity above the trend line indicates that we are ready to lift off and break out of this downtrend line. Now, in addition to that, we have the appearance of an upside down, what's called an inverted head and shoulders. So we saw the head and shoulders on the dollar index. This is just an upside down version of that. We have the left shoulder, this would be the head, and then you have the right shoulder. The slight difference, which could be very consequential, is that we have the right shoulder of Australian dollar, US dollar, sitting above the left shoulder, which means that the neckline, which is the line that goes through the pattern, is an upsloping neckline. And the implications of an upsloping neckline is not only is this bullish when we see an inverted head and shoulders, but the upsloping nature of the neckline implies that it's going to be a very explosive move once we get out of the resistance area, I would say around the 75, 76 price level. So once we clear 75 or 76, I think it will be liftoff in Australian dollar, US dollar for a profound trend higher over time. If you like this way of looking at the markets, if you liked my way of digesting the moves from a price action, price pattern standpoint, if you'd like to understand how I capitalize on monster moves, not just 20, 30 pip scoop outs, but 300, 500, 1,000 pip moves, then I highly suggest that you sign up for my weekly video report. Now, this is a no-brainer offer because the weekly video report is available for any price you want to pay. So you nominate the price, you nominate what kind of value you want to derive from this information, click the link below and sign up to the weekly video report. I look forward to seeing you on the next one. And with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.